In Portugal's wine region south of Lisbon, the harvest is rolling in. The manager of Bacaloa Wines is purchasing grapes for the label's new vintage. Eduardo Medeiros is already thinking about where to sell the new wine. Last year, he ran into problems. Our sector was hit hard by falling demand in key markets like Angola and Brazil. A problem that hasn't just hit the wine business. Many other industries in Portugal are suffering from economic slowdowns in export markets that are critical for the country. Investments are also in decline. The figures are alarming, says economist João Duca. Growth has really gotten slower and slower. But I think, for me, the most worrying indicator is the investments. They just keep falling and falling. The government and the opposition disagree about what the data actually means. The minister responsible is upbeat.
Our exports are still competitive. They are growing at 3–4% in the European markets, even if the markets in Europe are growing slower than predicted. So we are not having a stall in internationalization or in export expansion. We had problems in specific markets.
In the case of Bacaloa, however, those specific markets buy a third of all exports. The winemaker has taken serious hits. The bottom line is, you can't just create new markets to replace Brazil and Angola overnight. Tourism, at least, is booming in Portugal, but that alone won't be enough to get the economy back on track. Portugal has the third highest debt-to-GDP ratio in the EU, and the finance minister says that will take time to pay down.
We are going to have an interesting result in terms of public consolidation in this year. It's recognized by all international institutions, but this is a path that has to continue in the coming years, and it's important to gain trust.
Gaining this trust won't be easy. On the country's streets, political parties now push contradictory messages and agendas non-stop.